Hello traders, today is the 8th of September 2013 and the time in London is 54 minutes past 11 a.m. In New York 54 minutes past 6 a.m. Good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW traders. For Fibonacci trading, our website is www.dayprotraders.com. The title of this video is Practical Fibonacci Trading. Let's get started. We are looking at Protect and Gamble, Epic, Papa Golf, PG, Procter Gamble, American stock listed on the Dow 30, all right? And we are on the yearly charts, all right? The software that I'm using is TC2000, a very beautiful charting software that allow me to see the yearly chart. That's why I'm using it, okay? I prefer to see the yearly chart. So we want to see the bigger picture before we switch to a lower time frame. So stay with us, all right? This video is for educational purposes only. It's neither solicitation or an offer to buy or sell any financial instrument. It is primarily for the TSTW traders. So we see that we have a normal progression. The price went up from 1995 out to the year 2000. Procter & Gamble was going up, was an uptrend. And then we see a retracement. This is a 61.8% Fibonacci retracement. If you want to see, I want to show you practical Fibonacci trading. All right. You can see that I draw my line. I didn't go to the top of the wick. I stop on the closing price of the body of the candle. Some trader will push it to the top. You can go into their mind by doing that. In this case, because I'm on a yearly chart, I'm stopping right here like this. And we can see the 61.8% retracement. That's where we have my cursor now. I highlight it with the blue horizontal line here. All right, 61.8% retracement. So what has happened? Talking about practical Fibonacci trading, I want you to watch the full length of this video because I'm going to tell you something that will change, okay, your understanding of Fibonacci trading. The first thing that you must remember, if you are using a Fibonacci, you must understand that the center of the market is the market participant, all right? So the price going up, some people are buying, the price pulling back, some people, okay, are selling, all right? So human beings are creating the price progression. Human beings are creating the Fibonacci retracement. Another thing you have to understand is that when we took one stock like this, Procter & Gamble, there are some traders, they trade only one financial instrument, or some investor will keep their eyes, especially we are talking about Dow 30, these are blue chips, American blue chip stocks, and there are a group of hedge funds, investment bank, okay, that will be watching these stocks. Very often, what we have noticed, talking about practical Fibonacci trading, some stocks or some financial instrument will only retrace 50%. Consistently, you will see all the time 50%, and then it will change direction. 50%, you will change direction. Yearly chart, monthly chart, daily chart. These are what we call recurrent Fibonacci retracement or fractal Fibonacci retracement. It is about the characteristic of the financial instrument. You will see another financial instrument, very often you will see that they will retrace only 38.2% on various time frames. It's like their gene is in their gene, all right, so to speak. But we are not talking about, if you are talking about financial instrument, you are talking about the market participant. People, human being, okay, institution that are trading financial instrument know something. Probably the stock has an excellent balance sheet and a 38% retracement, they are willing to buy. Or the company is dominating the sector and 50% retracement, and they say they must buy. It is a buy. And you will see very often a financial instrument will be retracing 61.8 consistently, and they will not allow the stock to go below that level. There are another group of market participants. These are directors of companies. There are different methods being used today to defend companies, stocks. Why? Because sometimes directors have shares. They are paid in share. They have a holding in the company, and they must protect their interests. There are a lot of employee schemes which are designed to automatically buy stocks at a different price level. All right, so there are employees that are buying also. There are employee schemes designed by the directors to protect the stocks. So anytime the stock pulled back 38%, the money that were collected, that was collected through the employee scheme will be used, to defend or to push the stock back up. Some stocks are very difficult to sell because of these mechanisms to protect, the interests of shareholders, the interests of directors, the interests of employees, and you will see very often. So that's why sometimes some retracement patterns become recurrent. You will see very often. To avoid that the video is too long, you can see that the stock went down 61.8%. Look. I'm going to remove that. Talking about practical Fibonacci trading, I want you to remember the market participant and what is happening in the market. Here again, the stock went up to this level. So we see again a normal progression. This is not a distortion. This is a normal healthy move. It's not vertical, so it's a diagonal move. Another diagonal move. This is what we call a normal progression without a distortion. Look what the stock did. Again, pull back where? 61.8% after another progression. This is a recurrent Fibonacci retracement. First, normal progression, retracement 61.8 on the yearly chart of Protect and Gamble, all right. Second, normal progression, again, retracement exactly in the zone of 61.8%. Why? Somebody is happy to buy this stock at 61.8%. Probably, these are smart investors that know that this stock, pulling back 61.8 with excellent balance sheet, is a discount. It's a nice discount, and they are willing to buy it. Next move. The next thing traders must understand is that when we see, pay attention, talking about practical Fibonacci trading, traders get sometimes a bit too confused. They also use, I'm going to skip one step now, and they use also what we call Fibonacci extensions. So when traders see 61.8%, they will say their target is at 138% Fibonacci extension level. Using the TC2000 platform to have the extension, I will not start drawing from the beginning of the move. I will start from the end of the move, and I will bring it down to see my retracement. The level I want traders to watch, which I said to Elliott Wave traders already, is 138% Fibonacci extension level. You see the line here? I can draw a horizontal line there for you. Anytime you are using Fibonacci extension, the first level that you must keep your eyes on is 138% because it has some connection with Elliott Wave patterns. This is the line here. But above the 138% extension level, there's another level that will always put the 168% traders into trouble. Is the level of 150 extension. 150 extension. So if you are using TC2000 like myself and you are new trader and you are wondering how do I have the 150 extension level, I'm going to show you now. You right click on your Fibonacci tool. You click on edit, all right, or you go to TC2000 website, and they will there are many videos to explain to you, and you can change the numbers here. Okay, you see here I have 150. If I want to change it now to 1 to 7. I can just, are you following me? Yeah, you see I change it now to 1 to 7. I can clear it, backspace, and then change it back again to 150, and I can just click on set as a default. You see default sale, and I click OK. All right, because I know some of the TST traders use the same software like myself. My apologies to traders. So here it is. So after the 61.8% retracement, trader will be watching the 138%. This is what I say to TST traders. First level, you must watch for the extension 138%. Above it, 150. All right, do not be greedy. When you reach that level, be prepared to secure your gain. That's all. All right, but it's not all about the extension. I want to show you something. So the price, there was a normal progression from A to B, which I highlight with the green line here, and then the price pulled back here. All you need to do is to move this line here and project it here. You see how it stopped there? From here, how it stopped at 138% on the dots. Now, it went above a bit that level, you see, so now we have from here to here. We have again 61.8. What do? I just go like this. I don't need a Fibonacci extension. I just use my, drawing stick, all right, or my measuring stick, all right. So I just go again like this, all right. Another thing I want to tell traders, when you see a Fibonacci retracement like this, I want to bring my line back and adjust everything as I did without messing up my charts. All right. So what I want you to remember, when you see like this, normal progression like this, extend the line, you see, which I did with the red line here, extend it and leave it on your chart. This line is a very important line. It's a very important trend line. Sometimes you see the price will come and retest that level. You see here again, it went normal progression like this. Extend the line and leave it on your chart. These are key levels, and you'll be surprised now that if you start going a vertical here, this level will be a resistance level. All right. If it goes above it, we may check the median line between the red and the peak line. You understand? This is about practical Fibonacci trading. The key, what I want you to put into your mind, you are using Fibonacci. You want to understand that these are market participants, ordinary traders, investment banks, all right, hedge funds, pension funds, all right, money managers, and also directors of companies that are protecting their interests because they hold shares in the company. Some of their part of their salary is part of the share. So you will see sometimes traders see technical setup, they are selling, but the stock will not go anywhere because there are pool of money, so to speak, employee scheme that being used. Okay, as the stock drop a bit, they will buy and the stock will go up. All right, they are protecting their interest. And sometimes talking about practical Fibonacci trading, a retracement will repeat itself on various time frames. So you see here 68%, again 68%. If after the price went up again, it start going up, which level should we watch? The 68%. We don't want to start looking for opportunity to buy until it reaches the level of 68% because it happened to be a recurrent Fibonacci retracement. Very often, sometimes you will see that a retracement can copy itself or repeat itself, talking about fractal Fibonacci retracement. So now we see the 68% retracement taking place on this yearly chart. It happened once, it happened second time. You will be amazed, even on the 50-minute chart, on the 30-minute chart, professional will be consistently watching the level of 61.8% retracement level. In fact, there is one here right now. That's where the price stopped now for this protect and gamble on the 4-hour chart. You do not want to assume anything. You do not want to force it. So if I draw my line from here to here, you can see that the price is now at 61.8% right here in the zone here. Sometimes they may say to me, Joe, why do you stop here? Because from this point, it start going down before they push it up. Understand a little bit about Elliott wave. That's why I'm doing that. But if you want, I can put it here. And the 61.8 did not change very much. It's exactly again in the same zone. So Right now, the pattern of 61.8 on this 4-hour chart for the same stock, we see again, as the price was going down slowly, it reached the 61.8. You see, it starts slowing down here. Doesn't mean that it will definitely go back up, but if you were selling, or if you want to buy, you want to watch this level. It doesn't mean that you just buy because it reaches 61.8% level. You don't want to use the Fibonacci retracement level as a gambling tool. You want to take a valid signal, and if the signal has changed, the music has changed, the dance must change. All right, this is about a recurrent Fibonacci retracement, highlighting the activity that is taking place, in a particular financial instrument. You will see sometime, even you will see, for instance, the S&P 500 may retrace 50% and change direction, and most of the stock on the S&P 500 will also duplicate the same retracement pattern. Or, for instance, we see the Dow Jones index may retrace maybe 61.8% and then change direction. The market is dominating the sector controlling the individual financial instrument. The same Fibonacci retracement will be copied and pasted on all individual financial instruments. It will become the pattern, the model for the Fibonacci retracement for many stocks in the same sector. All I want traders to remember is that when we are using Fibonacci, we must not forget, the market participant, the directors, the employee schemes, all right? And some stock will have a specific characteristic. Some stock will only retrace only 50%. Some of them will retrace only, 61.8%. We want to, sometimes you will see a retracement that will be recurrent, repeating itself, as we have seen for Protect and Gamble. This subject is quite huge. I cannot cover it all in this video, but I will come back to it with a different video, and I will highlight a different aspect of recurrent Fibonacci retracement, and how one can use Fibonacci practically to make excellent or profitable trading decision. All right, you see now. Do not forget also the extension of the normal progression as I show you here, and I highlight on my charts. All right, so this is what is taking place. Also use the measuring stick as you see here. Instead of focusing too much on the extension, just see that if it is fully, because here you see the price went up to this level and it put back 61.8. Traders that were buying the stock know they start buying again. They know how much profit they have made here. They will be willing to achieve at least the same amount of profit. If the progression is less than the previous progression, it's bearish. But if it's longer, it's bullish. Traders that understand the area wave, we know that the first area wave in normal conditions should be shorter than the third area wave. So, but we will use the length of the first area wave to start project setting target as the third area wave is underway. All right. I've said enough, and I hope I make myself clear, and you have learned something from it. And we put it to use, to make excellent decisions. Until the next time, enjoy yourself and be very happy. We are the GSTW 24 traders. Speak to you soon.